Hey, what's going on, my friends? In this video, we are going to talk about credit. What is credit? A lot of people out there, I think are still a little iffy or have this just real negative idea of what this credit thing is. I don't want to blame anyone. I'm not going to say Dave Ramsey is one of the biggest financial kind of public figures out there who are just completely against credit pretty much. But I will say I might have made a video on this a while back where one of his big things is get your credit card, get your scissors and cut them up. I literally did that with one of my credit cards. I look back now and I think it was kind of foolish and I wish I did not do it. We're going to jump into what credit is right now because I'm sure some of you are saying, well, yeah, Dave Ramsey said to do it, so I did it and I don't regret it. Maybe you don't. Me personally, I do. But first, let's define what credit is. I pulled up two different articles. Of course, Investopedia, which is one of my favorite sites when it comes to kind of financial literacy. And then also Experian, which that is a credit bureau. So the reason I like to create my videos where I'm relying on articles and I allow you guys to see it. I know some other YouTubers will pull up an article, they'll probably jot their notes down, then they'll do a video talking about the notes that they got. But I like to do it where you guys can literally see the source that I'm relying on. That way, hey, if there's any issues, it's not really with me because I'm the messenger. I'm just reporting what I've gathered from legitimate sources. And if these legitimate sources have some invalid information, then take it out on them, not the messenger. So as you can see here on Investopedia, which I'm going to jump into this quick little definition, then jump into the Experian article because Experian is, it's Experian. I don't think you can deny anything that I'm going to read from there, but you shouldn't probably deny anything I read here because credit, well, how do you define credit? The term has many meanings in the financial world, but credit is generally defined as a contract agreement in which a borrower receives a sum of money or something of value and repays the lender at a later date, generally with interest. Credit also may refer to the credit worthiness or credit history of an individual or a company. To an accountant, it refers to bookkeeping entry that either decreases assets or increases liabilities and equity on a company's balance sheet. So I think it's pretty clear what it is. I don't think there should be any pushback or resistance. Ultimately, credit is generally defined as a contract agreement in which a borrower, so let's say I want to borrow some money, receives a sum of money or something of value and repays the lender at a later date, generally with interest. I'm the borrower, I want to borrow money. I go to a bank or my credit union and say I need to borrow money. They say, okay, here you go. That's essentially credit. The thing is you have to pay that money back. And as it says, generally it's with interest. When we jump over to Experian, I like Experian because, again, it's a credit bureau. So we are literally, you really can't go wrong with relying on sources and content that you find here on Experian's website. This article titled, What is Credit? Will answer and break it down and elaborate a bit more. So I want to read this article and just go over what credit is again and help make sure you guys fully understand it and why you might want to consider utilizing and putting your credit to work. Because like I said, figures like Dave Ramsey kind of got in my head at one point and had me thinking credit was the worst thing in the world. But it really isn't if you actually are on top of your money management, your budgeting, and you have cash flow and you know what you're doing, basically. I think credit can be a beautiful thing and can really help you with improving your life and moving forward in your financial independence journey. So when we look at this article, it says credit is the ability to borrow money and access goods or services with the understanding that you'll pay later. Pretty clear, pretty straightforward. That is what credit is. Lenders, merchants, and service providers, known collectively as creditors, grant credit based on their confidence you can be trusted to pay back what you borrowed, along with any finance charges that may apply. To the extent that creditors consider you worthy of their trust, you are said to be credit worthy or to have good credit. So if they are able to look at your credit history and they see that you have been paying on time, you don't have any delinquency, any situations where you fell behind on your payments and it just fell so far behind that you weren't able to pay anything and then another company comes in and buys it up, that you don't want to be in those situations. That has happened to me before. And so, yeah, I think there are some YouTubers out here that create content on these topics and they don't have experience with any of these things, but for some reason people eat it all up. And, some of them will openly admit that they've never had bad credit, so to speak, never really fell in delinquency, things like that. But yet they're giving you tips on how to get out of those situations as if they've done it before. No, I think they should be giving you tips on how to avoid or how to not fall in those situations. That can be more justified because that's the experience they have. But when it comes to knowing how to respond, what to do when you have a credit that's below 600, a lot of these people can't really speak to it to the extent that they are, and that people are eating it up. And I'm not knocking them. I'm just letting you guys know what it is. I've been in this position before where my credit was not considered good credit, or I was not considered credit worthy, but I've worked hard to get to where I am today. I have good credit now. So as we take a look at how credit works, it's important to know that everyone essentially is put in a position where you can have good credit. Now, maybe you start off without the full-on knowledge of what credit is and how you can really use it to your benefit. And that, unfortunately, is what kind of happened to myself. And it just set me off on I had a bad start, we'll say. The race started, I was still back there tying my shoes, everyone took off. That's how significant it can be to understand the value of credit. But let's talk about how credit works. In centuries past, creditors might have gauged your credit worthiness by reputation alone. Obviously, this method was subjective and prone to error, manipulation, and bias. These days, creditors prefer a more objective approach. In the US, typically they look at your credit history, your record of borrowing and repaying funds, at a first step in determining whether to issue you credit. Your credit history is summarized in files known as credit reports, compiled by 3 independent credit bureaus. Of course, Experian, which is the site we're on right now, TransUnion, and Equifax. Banks, credit unions, credit card issuers, and other creditors voluntarily report your borrowing and repayment information to the credit bureaus. Information in your credit report includes the number of credit card accounts you have, their borrowing limits, and current outstanding balances, the amounts of any loans you've taken out, and how much of them you've paid back, whether your monthly payments for your accounts were on time, late, or missed altogether. In more severe financial setbacks such as mortgage foreclosures, car repossessions, and bankruptcies. To help narrow their lending decisions, creditors often use a 3-digit number known as a credit score as the first step in deciding whether or not to issue credit. Your credit score distills the information on your credit reports to something that's easy to interpret and does so in a fair way that minimizes the possibility of bias. Sophisticated systems known as credit scoring models calculate your credit score by performing complex statistical analysis on the contents of your credit file. Different models such as the FICO score and Vantage score calculate scores differently, but all assign higher scores to individuals whose credit histories make them statistically more creditworthy than those with lower scores. So some of you might be wondering, what are the types of credit? Well, there are 4 types of credit, not just your credit card. I think people just think, oh, well, credit card and just like an open ongoing thing. That's the only thing. No. Listen, my friends, we got 4 different types of credit out there. Revolving credit. With revolving credit, you are giving a maximum borrowing limit, and you can make changes up to that limit. You must make a minimum payment each month, but otherwise the amount you pay can be any portion of your outstanding charges up to the full amount. If you make a partial payment, you will carry forward the remainder of your balance and revolve the credit. Most credit cards count as revolving credit. Charge cards. Once commonly issued by retailers for use exclusively in their establishment, charge cards are relatively rare these days. Charge cards are used in much the same way as credit cards, but they don't permit you to carry a balance. You must pay all charges in full every month. Service credit. Your contracts with service providers such as gas and electric utilities, cable and internet providers, cell phone companies, and gyms are all credit agreements. These companies provide their service to you each month with the understanding that you will pay them after the fact. Modern credit scoring systems, including the most recent versions of the FICO score and Vantage score, can factor your service payment history into your credit scores, but those payments are not always reported to the credit bureaus. The Experian Boost program enables you to share utility and cell phone payment records so they can be considered in credit scores based on Experian data. So something to consider, my friend. friends. No, not a promotional video or anything like that. Not trying to focus on experience services, but as you can see, there are some services that are provided from some of these credit bureaus that will help you with improving your potential, your credit scores. Installment credit. Installment credit is a loan for a specific amount of money you agree to repay, plus interest and fees in a series of equal monthly payments, installments, over a set period of time. Student loans, car loans, and mortgages are all examples of installment credit. You might be questioning, you might be wondering or asking, why do I need credit? Well, why do you need credit? Good credit is necessary if you plan to borrow money from major purchases such as a car or a home, or maybe you want to take advantage of the convenience and purchase protection a credit card can provide. A higher credit score can mean better interest rates and terms on loans and credit cards. Many card issuers also reserve their most enticing reward cards for customers with great credit. Lenders aren't the only ones who concern themselves with your credit reports and credit scores. Landlords may check your credit when deciding if they'll rent you an apartment or determining how large a security deposit to require. Insurance companies may use credit scores as factors in determining your rates. Utility companies may check your credit before deciding to let you open an account or borrow equipment. This is key right here, especially if you are someone who's, if you're not self-employed doing your own thing. Prospective employers may use information found in credit reports to make a hiring decision. I never knew this back in the day. Not just your credit. Some employers will look at, depending on how serious of a job it is in your position, some employers will go beyond just looking at your credit. They'll look at your family's background. I remember being in a job interview, and not to drift off topic, but really quickly, I remember being in a job interview and the employer was pretty much telling me hey, okay, you seem like you got your stuff together. What about those around you, your family, or your wife, if you're married, things like that? And what do you mean? What's my family have to do with me? However, some employers, they go deep. So I wasn't aware that your credit report was something an employer would consider, but it's something they will look into as well. So it's certainly something to consider, and you want to make sure that your credit is as high as possible. You don't want it to be low. If you're someone who's I don't care about my credit at all, there are reasons, and these are some of the reasons you should be a little more mindful and considerate of what it is. The last reason they have listed here is your credit report can even be used to verify your identity and for other purposes defined by federal law. Credit is a tool that can help you buy things you need now and pay for them over time. Establishing and building up good credit over time is an important element of sound financial health. So I wanted to really just go through both of these articles, explain what credit is, the different types of credit, things like revolving credit, for example. and this doesn't really touch on it, but things like an open credit line. I recently opened one, and it's kind of like a credit card, but it's not a little credit. It's literally, you can get cash from your bank or whatever the financial institution is. In my case, it's a credit union, but I have an open credit line, which means I can literally go to them and just take out cash directly, or have it just deposited into my savings or checkings account, and I don't have to deal with a physical plastic card. I don't have to deal with the interest rates being as high as they are on a credit card to get out cash. I know some of you saying, why do I need that? I can just get a credit card and get it on my cash. Yeah, but the interest rates you're going to be paying when you withdraw cash is going to probably be ridiculously high compared to you have an open credit line, where it is a revolving credit line that allows you to just get money anytime, and as long as you pay it in full, then you can go back and take that money out. So it's not like a loan where you can get cash, similar, but once you get that money from a loan and you pay it back, it's done. This stays open, and I'll make a video talking more about this. And if you guys have any other questions about credit, let me know. Comment down below, because I don't know. I know there's a lot more content these days about content. I feel like 10-15 years ago, there wasn't as much content just openly on the internet like this. And if there was, I wasn't actively making an effort to learn it, because I didn't understand the significance and the value of it, and how important it is to have good credit and how you can really benefit from it. So I'm trying to do what's only right, trying to share with you guys, share with other people out there who might not understand the value and significance of it as much as they may, or as much as they could, similar to myself way back when. So I hope you guys found this video helpful. If if you guys did, feel free to comment down below. Let me know your thoughts. Do you have good credit? Are you working on building your credit? At one point, my credit was below 600. I'm now, I want to say 750, but I don't want to lie to you guys or mislead you. I've been sitting at this plateau for quite a while now. Basically at 740. It fluctuates a little bit, but like 746. I'm stuck at this little plateau. I'm trying to just get that 750 hump and break it and then just keep riding with it. Goal is to hit that 800 club. That's the goal. But yeah, I can't complain. All is well. Hard work definitely pays off, especially if you know what you need to be doing. A lot of it is really just paying your bills on time. Some people talk about all these tricks that you can do to help improve your credit score even more, and I'm not really going to dive into all those things. Maybe I will, but I'm not a full believer that they actually work. I think the most effective way, without trying to play games and just be straightforward to get your credit up, is to pay your bills on time. But don't let any of these type of credits that you might be benefiting from utilizing fall into delinquency or anything like that. Just stay on top of payments and you should be good. And also low utilization. Don't let your credit card exceed 25%. Some people say 30. I just say 25%. Keep all of your credit card utilization below 25%. Pay on time. I think you guys will be good. So I'm going to wrap it up there. I'm going to make additional videos on credit, business credit, personal credit, different things like that. How you can use credit to grow your business, how you can use credit to start a business, etc., etc. So I hope you guys found this video helpful. If you have any questions or comments or suggestions, comment down below. Would love to hear what you guys think. How is your credit score? Are you working on rebuilding or building your credit? Maybe you never really had credit and you're just starting off. Some people say, oh, that's worse than I don't think so. I disagree. Either way, let me know what your thoughts are. I appreciate you guys sharing some of your time with me today watching this video. If you haven't yet, definitely like this video and subscribe to the channel. I appreciate it. And you already know I got to keep it moving, but I'll see you in the next video. Peace.